Hello, Oracles. The SPY is falling, Chicken Genius is warning of a market crash coming, the S&P is down 3.87% to 3750 at a support level, the Nasdaq is down 4.68%, crypto is crashing, we've got Bitcoin coming down to 22,000 almost. If we hit the 21,000 mark, MicroStrategies is going to get margin called. What is going on? Let's take a step back and take our emotions out of this, because that's the most intelligent thing to do. That is the wisest move. Is let's take our emotions out and figure out what is actually going on. So the market right now is continuing to throw its temper tantrum because inflation is so high. We are still reeling from the CPI data coming in last Friday. So the market right now is pushing for a 75 basis point hike from the Fed because we need to get inflation in line. So the Fed has already announced this evening that they are most likely going to be going with a 75 basis point hike. So with the S&P hitting its support at 3750, if we don't bounce off of that, we could come down to 3350, which is the next support. But with the news that we got tonight of the 75 basis point hike, we might see that bounce tomorrow and come back up. Now the Fed meeting is going to be starting tomorrow and it goes until Wednesday. On Wednesday, we will have Jerome Powell speaking at 2:30 p.m. Eastern Time to give us their decision. Now, one of the issues that we do run into with the Fed raising interest rates is when they raise interest rates, it does not take effect and really affect the market for 6 to 8 months down the road. So it's not like the Fed is going to be raising interest rates on Wednesday and then July's CPI data is going to reflect that decision. It's not how it works. So they really have to figure out, all right, how is our decision now going to affect the market and the economy 6 months down the road? Now, the Fed has said themselves they're really not too concerned about how their decisions affect the market. They just need to get inflation in line. And they need to do it wisely, because if they over-raise the interest rates and go too hawkish down the road, if natural things like higher inventory or deflationary measures like technology bring inflation down too far, we can go into a deflationary place. Now, on that stance, that actually might not be a bad thing if we catch it, because what could end up happening there is the Fed could U-turn and then bring interest rates down to get inflation back up. Every single time the Fed has made a U-turn like that, that has signaled a bull run. So, if the Fed's going to go hawkish now, this could lead us to what we have discussed with an end-of-the-year rally. So if the Fed goes a little too hawkish now, we might get to the end of the year where natural things plus the Fed's interest rates raising going up now could change the market at that point. Maybe we see inflation coming down too far or further down than they wanted, and then the Fed can go more dovish at the end of the year or even make that U-turn. Lots to happen between now and then, but this is just one of the scenarios that could potentially play out going into the end of the year. Now, conversely, we've got Chicken Genius, who is warning of a stock market crash. Of course, he does not know everything, but he's pretty wise, and he called the second bottom coming in May, and we saw it. So do we go further down from here? That has yet to be seen. Do we actually get into a stock market crash? Again, that has yet to be seen. But taking a note of some of the things that are going on right now, looking at some recessionary pressures that we could be getting into, we haven't officially got to a recession, but we see some signs of it coming, and we've already got some companies starting to file for bankruptcy. We've got Revlon, who filed for bankruptcy. We've got the Electric Last Mile Solutions, an EV startup that is filing for bankruptcy as well. So looking at Tesla in particular, people say competition is coming. What's going to end up happening are these very small startup companies like Electric Last Mile Solutions are going to end up going under. So these little bits of competition that are out there will get washed aside. How long and how deep the recession goes will determine how large of companies and how many companies will end up going under. So right now we are still in a place where unemployment is doing well, but there's a lot of jobs that are out there. There's 1.9 jobs for every one person. When we get to a point where a lot of these bankruptcies start happening, there's going to be a lot of layoffs and a lot of people who are going to be looking for jobs. When this happens, there's going to be a lot less buying pressure that's going on in the market because people don't have jobs and prices continue to go up due to inflation. So this could be one of the things that ends up turning inflation around naturally come the end of the year if we continue to get these bankruptcies rolling through. And now in my line of work, which is construction retail, I've been discussing a lot of the business going on with our customers, and many of them, their business is still booming, but two things are starting to happen. Many of them are telling me now that they have a lot of recurring business coming in, but not a lot of new business coming in. And others haven't even started raising their prices yet to offset the costs that have gone up. So a lot of consumers haven't even seen the costs getting passed down to them yet, at least as far as construction goes. So we can start seeing these costs going up, the consumers then seeing prices going, ooh, that's a lot more than I was intending on spending. I'm not going to go forward with this job and I'm going to pull back. We might start to see this happen, and I don't know how quickly it's going to fall off, but I have seen in the past where it just drops off of a cliff. So we'll see how this transpires going forward, but I'm starting to see these signs coming, so perhaps this is another sign of deflation coming at the end of the year, so inflation will not be as bad and could naturally pull itself back. And so looking at the market stats by themselves, the VIX is over 34, which is starting to get pretty darn volatile in the market. You start pushing to 38 and that's starting to get really ugly. So we saw that today. The 10-year Treasury is at 3.36%, which is pushing mortgage rates higher, up over 6%. So with this happening, we can definitely see housing prices coming down if this continues to go up or stay at these higher levels. So a lot of different pieces pointing to spending possibly coming down in the future. So again, the Fed going to be raising rates most likely 75 basis points, and then we'll probably get some insight into how they feel about the July FOMC meeting and what they might do for rates there. Now, we did hear from Bullard a little while back saying that, the Fed basically needs to raise rates to what the market is looking for. Now, while the Fed doesn't do what the market wants, sometimes they need to, and that's really kind of where they're at. So if they raise it 75 basis points, like they said they are going to, again, we might see a nice little rally tomorrow in the market. And now when it comes to crypto, Gary Black was mentioning on Twitter how most likely we are not going to see a recovery in crypto until the Fed stops tightening. So again, we've said this all year long, we're not going to see a true turnaround in the market until the Fed stops all of this. It's just a matter of where is the bottom going to be before we at least level off and maybe we don't start a bull run, but eventually we're going to hit the bottom. Now when it comes to Tesla, the bottom right now is at about 620. So I'll discuss more about that in the morning, but seeing as how we're pulling down, how much further are we going to go? Are we going to bounce off of that and come back up? Or are we going to break lower than that and continue going down? And now the SPY has had two massive gap downs in a row, bringing us down to an RSI in the low 30s. So there's a lot of signs that are pointing to a potential turnaround and a bounce coming in the next couple of days. So whether it happens tomorrow or Wednesday waiting for the meeting is yet to be seen. So it seems like based on the charts we might get this, but is this going to be a bottom where we start to come back up? Or is this just going to be another dead cat bounce and a little bit of a bull trap where we come back up and then continue to pull down further? Again, nobody knows what's going to happen. What I have started to do with my own strategy, now this is mine, not financial advice, is I've started to pull back a little bit. I'm not adding as much as we pull back. I still added to Tesla about $20 today at 2 different increments. But when it comes to other stocks, I'm not adding. I have pulled back on my crypto ads. I'm actually going to be cutting back a little bit more on my dollar cost averaging in some of the other stocks that I don't have as much of a high conviction in, just to kind of save up that cash. Because when it comes to Tesla, I'm going to continue dollar cost averaging. I'm going to leave that strategy alone. But everything else, it's not like we're going to bounce and come right back up. We are not, at least in my eyes, we are not going to get a V-shaped bounce like we got when COVID hit. So that COVID crash, we came down, Fed turned 0 interest rates on, and boom, we shot right back up. I don't think it's going to happen this time. I think it's going to be a slower, gradual climb out of this. So that means that we will have plenty of time to add to our stocks when we do turn around. So having the cash on the side will allow that. So of course, we don't know when that turnaround is going to come, and because it's going to be gradual coming out, dollar cost averaging is still going to be the best way to go for me. Chicken Genius himself said he is done buying in the market. He is just sitting there and he's actually shorting the market at the moment, which of course isn't helping any. He has a lot of money, but he's not like big money. There's a lot of big money that's out there that is shorting the market, and that's not helping either. But there's also a lot of big money that's out there that has been buying the dips as we hit lows. Warren Buffett, for one, has been buying as we have been going along this year. Cathie Wood and ARK have been buying the dip at certain increments along the way also. So there is some big money that's out there that is just monitoring, and every time we hit a low, they add a little bit. Now they're not just dumping all of their money in, they're adding little bits at a time as we continue to trickle down, because even big money doesn't know where the bottom is actually going to be. And so I've just again altered my numbers a little bit, so I'm adding a little bit more to cash and just saving more cash than I have been adding to crypto and other stocks, and I will just start dumping that back in when we do see that clear turnaround. And if we do run into that situation where the Fed is being too hawkish now, and then natural things bring the inflation down at the end of the year, and then the Fed has to U-turn, that will be my signal. And it might not just be exactly when they do it, because the market always tries to jump in a little bit early. But again, if we're going to start a bull run, it's not really too late to get in if you get in, right afterwards. But a lot of times the market will anticipate it and start that run. So when we start hearing that chatter about the Fed maybe having to U-turn, that will be my signal to get into the market. Now, I was talking with one of you in the comments earlier about kind of how the market plays out, and when it comes to bulls and bears, and it's not always a smooth run, but when you look at an average decade-long time period, there's usually probably about 8 years where bulls are in charge, and then 2 years where bears are in charge. And of course it fluctuates. We had like the 2018 time where the bears had it for a little while, and it's always a day-to-day battle as it goes. But when you're looking long-term stretches, we usually have an 8 to 10 year bull run and then about 2 years of a bear run. So right now we are hitting that bear moment where we need to basically be in this for a year or two, and it's good. It's healthy for the market. That's why bears are important. That's why I love you guys as bears in the comments, because we need you. We really need you to help, clean out the market. If we only had bulls, there would be so many zombie dead companies that are out there sucking up unnecessary money and just being a drag on the economy. They need to get flushed out, and the bears are very important to make that happen. So having us go through this for an extended period of time is painful, but very necessary. So this is a good thing. And again, when we do make that U-turn, we'll go into a nice bull run again for probably about 8 years. So I'm still optimistic about the market, more so in the long term than in the near term. Near term, we are still going to have our roller coaster ride. It's going to be rough. We might get that little bounce for a little while in the next couple of days. Again, I don't know, but the charts and noise kind of seem like we are going to move in that direction for a little while. So I'm going to be paying attention to this. I am just still in the I'm going to take what the market's going to give me scenario, and until I see that the market's going to give me a long extended bull run, I am still going to be cautiously optimistic. It's just how I am. I like to keep that silver lining going at all times, but I also need to pay attention to the negatives that could potentially be happening to keep myself protected and invest wisely. Let me know your thoughts in the comments. How do you feel about the market going over the next couple of days into the FOMC meeting? Do you think we are going to see a bounce the next couple of days with the news on 75 basis point hike coming? Or do you think that we are going to crash further and get down to that 3350 level? Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all the latest Tesla news, pertinent stock market information, and all of my daily trades. We have a nice discussion going on in Discord. That link is in the description. And if you'd like to help the channel any further, I am over on Patreon. I share over there my income and my investments, all of my price targets for Tesla, and my production forecast. Thank you so much. Have a great one.